Hello guys, welcome to my channel. In this channel, we will be doing business analysis and case studies about various businesses. So today we are going to know about TCS or the company analysis of TCS. Let's talk about the company. TCS is the flagship company of TCS, and as you know, it's one of the biggest IT service companies in India. It is ranked as the most valuable global brand in India and also the most valuable IT company in India. It is ranked 46 in the most valuable global brand. Now, let's talk about the pricing history. As you can see in this graph, the graph is moving upwards. If you take an average, it's going up and up and up. So there is no problem in the company. Now let's dig deeper and know more about the company. Let's see the quarterly results of the company. Sales have been increasing in a quite aggressive way. The operating profit are increasing, there is no problem with that. Profits before tax and the net profits all are increasing. So there is no problem with the moat of the company. Look at the profit and loss balance sheet of the company. If we see the profit and loss statement of the company, the sales have been increasing and it has almost doubled in 10 years, which is good for the company. The operating profits, they are increasing. The operating profits are increasing, so there is no problem with the company. Now let's look at the revenue breakup of the company. As we can see, banking, financial service and insurance account for around 39.2% of the total revenue of the company. The retail and consumer business accounts for 16%, communication, media and technology 16.6%, manufacturing 9.5%, life sciences and healthcare 10.7%, and so on. So as we can see, the business of the company is diversified, which is good for a company. Now if we see the revenue breakup in terms of geography, more than 50% of the revenue comes from the Americas, guys. That's a huge number. The 31.9% of the revenue comes from Europe, 5.1% comes from India, and 10.8% comes from the rest of the countries. So here is a worrying factor. Here is a worrying factor for TCS. If the American economy is down or there is a recession in the American economy, it can hurt TCS quite badly. Now see the client base of Tata Consultancy Services. It has Google, Amazon, Apple, Oracle as one of the biggest clients. Presently it has around 50 clients which pay around $100 million on a yearly basis. It has around 100 clients who pays more than $50 million on a yearly basis. That's a huge number. If the employee base, they are quite diversified. It has employees from North America, Europe, UK, India, Latin America, Australia, among others. The participation of women in the workforce is 37%, which is quite good. Now let us look at the stock price movement of TCS with Sensex. You can see from the history that TCS share price moves along with the Sensex. So if the Indian economy is growing, TCS is also growing. Also, let us look at the production platforms of TCS. You can pause the video and go through it. How the tech curve of the IT industry looks like. So here are some history. Is the data taken from history of some of the biggest tech giants in the world, like Apple, Amazon. So as we can see, there is a initial hype in the market as the perceived market opportunity is more than the actual market opportunity. Now after some time facing the reality, the company invests a lot in R&D and innovation, which leads to lift off to ultimate market opportunity and hence boom in stock prices. Let us look at the peer comparison of TCS. The peers of TCS include Infosys, HCL Technologies, Wipro, Tech Mahindra. They are quite big companies. Now, let's compare the returns given by TCS, Infosys and HCL Tech in the last 2 years. Now, as we can see between TCS, Infosys and HCL Tech, there is minimum disparity and they are almost giving the same returns. So it indicates the IT industry in India is growing. Let's look at some of the problems related to the IT industry. Huge investments in R&D are required due to fast innovations in the tech. Skilled IT employees in India are charging higher salaries. Multifold increase in cyber security cases in India. Now, rules can also government rules can also lead to decrease in growth rate of the company. Now, government rules can also lead to decrease in growth rate of the company. Now, let's talk about the dividends provided by TCS. TCS has paid about 80% of its cash flows in dividends from financial year 15. Guys, it's huge. So it's one of the best dividend paying stocks in India. So it's one of the best dividend paying stocks in India. Let us look at some important ratios related to TCS. The market cap is around 12 lakh crores, which is huge. Price to earning ratio is 31.4, which is moderate. Return on capital employed is 54.9%, which is huge. Now, if we see the dividend yield 1.33%, as said earlier, TCS is a high dividend paying stock. Now, price to book value 13.6%, a bit high. The return on equity is 43.6%. That is quite a massive margin. If we look at the sector PE, it's around 29.06, while the trailing 12 months PE is around 31.58. So seeing this, TCS might seem a bit overvalued, but it's absolutely not the case. Now, holding over the years, the promoters have increased their shareholdings. The foreign institutional investors has decreased a bit. Now people will be saying the FIIs have been decreasing their shares. Now, if we look at other industries, the FIIs have been withdrawing cash from the Indian market quite aggressively. If we compare it to TCS, it's quite low, so it's a good sign. The DIIs have kept it almost constant. The government has kept it almost constant. The public has increased it slightly, so it's a good sign that the promoters have increased their shareholding, which provides good sign that they have faith in the company. Now, let us look at some pros of TCS. If you want, you can pause the video and go through it. There are some major cons. As said earlier, majority of the company's revenue comes from US. So if a recession hit US, it can directly affect the stock prices of TCS by a huge margin. If you want to know more about TCS, there is a SWOT analysis. If you want to know more about TCS, I will attach a link in the description about the SWOT analysis of TCS. You can go through it. The final part, that is the conclusion. Doing the fundamental analysis of TCS, I can conclude that it is one of the best stocks for SIPs as it will grow along with the Indian economy, and it has a huge global presence. Also, this is not an investment advice. Please do your own due diligence before you invest in this stock. Thank you and goodbye.